Welcome to Saxo Bank's Morning Call. This is Wednesday, the 20th of February, and the big news overnight, it actually happened in the evening in the US time, was the news that apparently, or rumors, because it hasn't been confirmed yet, but the US is pressing China to put in the understanding of the memorandum of understanding in the trade deal between the US and China to stable the Chinese currency. If you look at the chart here, we can see that the dollar CNH has weakened, so the dollar has weakened against the Chinese currency, and this is seen as a further step towards certainty that we will get a trade deal, and maybe that it becomes a little bit more comprehensive than initially thought. We're getting very close to those lows from a couple of weeks ago. And this is quite important because fixing or stabilizing the Chinese currency is the US effort to avoid China using the currency weapon to sort of offset the pressure from tariffs and a more stronger trade deal that puts China in a sort of a little bit weaker situation against the US. So what we have on the table is definitely that we're moving towards this trade deal, and it bolstered sentiment in equity markets in Asia as well. We saw South Korea and Japanese equities being firmer overnight, and it seems like sentiment is stronger today, given that little bit weakness we saw yesterday. In pre-market European session here, we got Glencore reporting its earnings, and they're missing on their operating profit. It was a little bit of a mixed bag. They are, I would say, quite confident on 2019 versus 18. They see production across all the metals going higher. And I just put in a key item here. It seems like they're going to divert capital investments away from the coal business. Basically, they are now committing themselves to the Paris Accord, and they're going to drastically reduce coal production over time. So I think that's a pretty big news for that part of the industry. But elsewhere, before we go to you, Kim, I mean, maybe you want to comment maybe on the euro dollar, but euro dollar I think will be in focus tonight. We have the FOMC minutes, and it will be interesting to get sort of illuminated why the Fed did that big pivot back on the January meeting. We had that very hawkish December that took equities all the way down into the hole. And I think the market is very curious to see where we're going from here, because we were sort of promised 2 rate hikes and now maybe none. And what about the balance sheet reductions? And just quickly, if you look at the chart, we're just stuck in a very tight range. I don't know I haven't drawn any technical lines here, but
well, it's not really necessary. Everybody knows what it is. It's been like this for 2-3 months now, almost 3 months. And that's. I mean, we tested the very close to the support yesterday, a couple of days ago, bouncing a little bit back. I mean, and even in the broader picture, I've been looking at daily, weekly. I mean, there's really no direction. No. So we should see. I mean, what we see. I mean, volatility extremely low. Yeah. And after 3 months of this, we should see suddenly a move. Sometimes actually when you least expect it. Yeah. So maybe not tonight, maybe a couple of days later or something, but it's exactly it's overdue.
Yeah, and that's also I know John Hardy has mentioned it, some of his FX updates, option strategies to play this potential sudden move in the euro dollar. Whether it comes tonight or not, I'm not that confident. It depends whether there's a big surprise in the language and forward guidance in the FOMC minutes. But at this point in time, I know John Hardy has an FX update out, which you can see on home.saxo, and he's not expecting a major drama tonight. But I think the biggest and most interesting asset right now, coupled to the FOMC minutes, is, I would say, gold. Also now that Bank of Japan is maybe moving towards going outright easing again. So you brought with us a chart here, Kim, and what are we looking at? It looks pretty aggressive to the upside.
Yeah, it's the gold spot. We've been looking a bit this couple of weeks ago, also when we had Ole here, and we talked about the 1300 that should hold, and it does, and it really has taken off. This is a daily chart, and we are trading in this very steep channel here. I expect a little bit of pullback maybe, but in general, I think we are on the way to 1365, 1370. A very strong move. I mean, there's really nothing stopping at them. There's no resistance until then, and as you can see, I've drawn also the support around 1300. Tested 5-6 times or something like that. Very strong support there. So yeah.
Yeah, I wouldn't be surprised if we get a very dovish FOMC minutes and they sort of sketch out a path towards zero interest rate hike and actually confirming the balance sheet reduction is just around the corner. I wouldn't be surprised to see gold go up and test that recent high.
No, we could even see it break it bullish out of the rising channel.
Yeah, because as you said, there's no resistance for the other central bank as well. No. But staying with the commodities theme, oil has been, I think, the big story now for 5 months, just all the way down in Q4, and now we have come back tremendously. And you have this chart where you have put in the retracement levels, and what are you looking at here, Kim?
Yes, actually, a lot of people talked about this retracement levels and also the inverted or bottom shoulder-like pattern that we have now broken the trend line just around the resistance around 64. I think we will see it slowly moving towards the 70, 72 and a half maybe. Which is around 50% of the sell-off we saw last year. And also we have the red line coming down. That's the 200 simple moving average. Will also offer some resistance, but it has broken out bullish, and so maybe we could see a little bit of pullback towards testing. That's what we usually see after breaking resistance, testing on the other side, the support, and then it takes off.
Yeah, exactly, and maybe one of the catalysts for another takeoff could be a weakening dollar. If the Fed is more dovish and we get a trade deal, then you will probably see some of the pressure being taken off on the dollar. And I think the world would need that as well, and that could take oil even higher. So interesting things. And before we go into some of the calendar stuff, we also have to look at the equity market. And you brought with us a DAX chart here. Again, DAX has been probably one of the most boring equity indices for some while because it hasn't really had the violent moves as we've seen in the Nasdaq and the CSI 300 index.
Now we saw a very strong move. Actually first a strong sell-off late last week, and then a strong move at the end of last week. I think it was Friday. Tested this 11,370 seems to be some resistance. I checked in this morning. It seems to that the future is trying to push through the resistance. That's going to be interesting. If we get a close above that resistance around 11,370, well, there should be room up to around 11,700 where we will see the next resistance. If we get a pullback again today, if it can't really break it, well, then maybe we will see a couple of days of weakening. But in general, I've been looking also at the American indices. I don't think we have them with us this morning.
No.
But I think we will see maybe a couple more days with slightly bullish markets. But then it's ripe for a correction.
I mentioned it actually in my equity update yesterday that I would love to see the German equity markets push through those resistance levels. Also, South Korean equities I would like to see being more bid. I don't like seeing a rally in US and Chinese equities not followed up by probably the two most sensitive export economies in the global economy, which is the German and the South Korean economy. So I would like to see. It's going to be a quite interesting session, that's for sure. And in that update, if you look at the chart here, I also updated. I mentioned this in my monthly equity update where I zoomed in on equity performance across sectors, but that's quite narrow. So I've actually broken it down against the business cycle on industry level. And keep in mind, just for perspective, we are still in the first column, so we're having a global economy that is below trend and it's still contracting. That's at least the data we have from the OECD. And in that type of environment, you don't want to have too much exposure in semiconductors, banks, insurance companies, and consumer durables and automakers, also materials and energy. So that's just for perspective. But we will probably soon get to the other phase in the business cycle where we'll be expanding from low levels, and that's where it gets really interesting. As you can see here, typically we see very, very strong returns in semiconductors. So I think we're only a couple of months away from exciting times if we can get it right. Moving to the earnings calendar, we had Glencore today. I've already said that. We'll have CVS, Health out of in the US together with Southern Company, which is a macro story basically. And then tomorrow the big story is all about Baidu. I think it's the leading Chinese technology company on search engine. A lot of focus on profit margin squeezing going on there. They have accelerating costs and they're getting pressured by Tencent and Alibaba. Then also the macro calendar. it's very, very light today. We basically only have the FOMC minutes at 1900 GMT. That's important. Potentially the Fed's Kaplan speech in Houston today at 1810 could be of importance, but otherwise it is those FOMC minutes that the market will be watching very closely. And then we'll have the Eurozone flash February PMI tomorrow. So I think Thursday in many ways will be a very interesting trading session. And I think that concludes it for today. We'll be back same time and place tomorrow. Thank you for watching. Thank you.